See, we are talking about standards on auditing SA 701. See, the scope of 701, communicating key audit matters in the auditor's report in the context of auditors having formed an opinion on the financial statements. As a whole, communicating key audit matters in the auditor's report, not a substitute for disclosure in the financial statements, then the applicable financial reporting framework requires management to make or that are otherwise necessary to achieve fair presentation. A substitute for the auditor expressing a modified opinion when required by the circumstance of the specific audit engagement in accordance with the standards on auditing SCS 705 or revised. A substitute for reporting in accordance with SCF 570 revised when material uncertainty exists relating to events or conditions that may cast significant doubt of an entity ability to continue as a going concern. So a separate opinion on individual matters, a substitute for disclosure in the financial statement, a substitute for the auditor expressing a modified opinion in case of circumstance of a specific engagement as per SC 705. A substitute for reporting accordance with SCF 570 and a separate opinion on individual matters. See, applicability of SCA standards on auditing SCA 701. This standards applies to audits of complete sets, a general purpose financial statements, listed entities and circumstances when the auditor otherwise decides to communicate key audit matters in the auditor's report and required by law or regulation to communicate key audit matters in the auditor's report. However, standards on auditing 705 revised prohibit the auditor from communicating key audit matters when the audit disclaim an opinion on the financial statements unless such reporting is required by law or regulation. Determining the key audit matters, the auditor shall determine from the matters communicated with those charged with governance those matters that required significant auditor's attention in performing the audit. In making the determinations of the audit shall take into account the following. What are those? Areas higher assessed risk of material misstatement or significant risk identified in accordance with the standards on auditing SA 350. Significant auditor's judgment relating to areas in the financial statement that involved significant management judgment, including accounting estimates that have been identified as having high estimation uncertainty. The effect of the audit of significant events or transactions that occurred during the period. Examples of the key audit matters: assessment of impairment, provision for losses and contingencies, valuation of financial instruments, matters relating to revenue recognition, and taxation matters, multiple tax jurisdictions, uncertain tax position, deferred tax assets. Communicating the key audit matters The introductory language in the section of the auditor's report shall states that a key audit matters are those matters that in auditor's professional judgment were of the most significant in the audit of the financial statements of the current period, and these matters were addressed in the context of the audit of the financial statements as a whole, and informing the auditor's opinion thereon, and the auditors does not provide a separate opinion on these matters. In case there are no key audit matters, to communicate the auditor's report must specifically mention that by carrying a key audit matter paragraph and under which they shall mention that there are no key audit matters to communicate. See, let's go to SA 705. See, SA 705 speaks about modification to the opinion independent auditor's report. Modified opinion standards on auditing SA 705 deals with the auditor responsibility to issue an appropriate report in circumstances when in informing an opinion in accordance with SA 700. The auditor concludes that modification to the auditor's opinion on the financial statement is necessary. Types of the modified opinion as per SA 705: qualified opinion, adverse opinion, disclaimer of opinion. The decision regarding which type of modified opinion is appropriate depends upon the nature of the matters giving rise to the modification, that is whether the financial statements are materially misstated, or in the case of an inability to obtain sufficient appropriate audit evidence may be materially misstated, and the auditor's judgment upon the pervasiveness of effect of the possible effect of the matter on the financial statements. Objective: the objective of the auditor is to express clearly and appropriately modified opinion on the financial statements. That is necessary when the auditor concludes based on the audit evidence obtained that the financial statements as a whole are not free from material misstatement. The auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statement as a whole are free from material misstatement. Circumstances when a modification to the auditor's opinion is required. The auditor shall modify the concludes that based on the audit evidence obtained, the financial statement as a whole are not free from material misstatements. Auditor is unable to obtain sufficient appropriate as a whole are free from material misstatement. Determining the type of modification to this opinion, qualified opinion. The auditor shall express qualified opinion when auditor having obtained sufficient appropriate audit evidence concludes that misstatements individually or in aggregate are material but not pervasive to the material evidence. The auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, but auditor conclude that the possible effects of the final issue. Disclaimer opinion. The auditor shall disclaim an opinion when the auditor is unable to obtain sufficient appropriate audit evidence on which to base the opinion, and the auditor concludes that the possible effects on the financial statements of undetected misstatements, if any, could be both material and pervasive. The auditor shall disclaim an opinion when, in extremely rare circumstances involving multiple uncertainties, the auditor concludes that notwithstanding have obtained sufficient appropriate audit evidence regarding of the individual uncertainties, it's not possible to form an opinion on the financial statement due to the potential interaction of the uncertainties and their possible cumulative effect on the financial statement. Draft the disclaimer opinion. We were engaged to audit financial statements of ABC Associates, the entity which comprised the balance sheet as on 31st March 2026, the statement of the profit and loss, the statement of changes in equity, where applicable, and statements of cash flows for the year then ended, for the year ended, and notes to the financial statements including a summary of the significant accounting policies. We do not express an opinion on the accompanying the financial statements of the entity because of the significance of the material described in the basis for disclaimer opinion section of our report. We have not been able to obtain the sufficient appropriate audit evidence to provide the basis for an audit opinion on those financial statements. For example, MNO Limited for the financial year 22-23, Mr. PRT Associates are the statutory auditor of the company. During the course of audit, the audit team was unable to obtain sufficient appropriate audit evidence about the audit evidence about a single element of the consolidated financial statement. Thus, the auditor was also unable to obtain audit evidence about the financial information of the joint venture investment XYZ Limited. That represents over 90% of the entity's net assets. What kind of opinion should Mr. PRT Associates are unable to obtain sufficient appropriate audit evidence about the financial information of a joint venture investment and represents over 90% of the entity's net assets. The possible effects of this inability to obtain sufficient appropriate audit evidence are both material and pervasive to the auditor should the relevant extract of the disclaimer opinion paragraph and basis for disclaimer of opinion paragraph is as under. Disclaimer of opinion. We do not express an opinion on the accompanying the financial statements of MNO Limited Because the significance opinion section of our report, we have not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit of an audit of opinion on the financial statements. Basis for disclaimer: companies carried at 95 crores on the group consolidated balance sheet, which represents over 90% of the group net assets. As on 31st March 2023, we are not allowed to assess the management and the auditors of XYZ company, including XYZ company auditors audit documentation. As a result, we were unable to determine whether any adjustments were necessary in respect of the group proportional share of the XYZ company assets that it controls jointly, its proportional share of XYZ company is liabilities for which it is income and express and expenses statements of changes equity and the consolidated cash flow statement. What is pervasive? The pervasive is a term used in the context of the misstatements to describe the effects on the financial statements, misstatements, or the possible effects on the financial statements, misstatements, if any, that are undetected due to an inability to obtain sufficient appropriate audit evidence. Pervasive effects on the financial statements are those that in the auditor's judgment are not confined to specific elements, accounts, or items of the financial statements. If so conformed, represent or could represent a substantial proportion relation to disclosure the are fundamental to users understanding of the financial statements. Pervasive, therefore, is that which is not localized to any one or two elements of elements of the financial statements. For example, if sufficient appropriate audit evidence is not available for any inventory, but the other elements are properly supported by documentary evidence, then the non-availability of information on inventory is localized to possible misstatements of inventory but has no impact on the other elements like trade receivables, PPE, loans, trade payables, etc. Therefore, it is necessary to ascertain whether the impact of misstatement is pervasive or not. Is pervasive or not? Is misstatement is pervasive or not pervasive? Consequences of inability to obtain sufficient appropriate audit evidence due to management imposed limitations after the auditor has accepted the engagement. If after accepting the engagement the auditor become aware that management has imposed limitations on the scope of the audit that the auditor considers likely to result in the need to express a qualified opinion or to disclaim opinion on the financial statement, the auditor shall request that management remove the limitation. If management refuses, if management refuses to remove the limitation, the auditor shall communicate the matter to those charged with governance, unless all of those charged with governance are involved in managing the entity and determine whether it is possible to perform alternative procedures to obtain sufficient appropriate audit evidence. If the auditor is unable to obtain sufficient appropriate audit evidence, the auditor shall determine the implications as follows. If the auditor concludes that the possible effect on the financial statement of undetected misstatement, if any, could be material but not pervasive, the auditor shall qualify the opinion. Or if the auditor concludes that possible effects on the financial statements of undetected misstatements, if any, could be both material and pervasive, so that qualifications of the opinion would be inadequate to communicate the gravity of the situation. The auditor shall withdraw from the audit where practicable and possible under applicable law or regulation. If withdrawal from the audit before issuing the auditor's report is most practicable or possible to disclaim an opinion on the financial statements. If the auditor decides to withdraw, when the auditor decides to withdraw, before withdrawing, the auditor shall communicate to those charged with governance any matter regarding misstatements identified during the audit that would give rise to modifications of the opinion. Where auditor withdrawal is not permitted, the listing agreement and the Securities and Exchange Board of India is derivative on the resignation of the auditor does not permit withdrawing from the engagement. What issuing the audit review report, the said directive continued in circular number CIR CFD CMD to CMD 1144 to the 144 bar 2019 date 18 2009 issued by the Securities Exchange Board of India. Inter Allied provides that if the auditor proposed to resign within 45 days from the end of the quarter period covered under the appropriate, then auditor shall, before such resignation, issue the audit limited review report for such quarter. After 45 days from the end of the quarter period covered under the appointment, then we shall, before the resignation, issue the auditor limited review report such quarter as well as the next quarter. The limited review, if the limited review report has been issued for all the 3 quarters, then the auditor shall issue the audit report for the full year before resigning from the engagement. ICAI announcement resignation of auditor. The ICAI has made an announcement that the auditor of an unlisted company shall not mention a professional preoccupation as a reason for the resignation. The auditor shall mention the reasons clearly for the resignation in the resignation letter issued in the company. Preoccupation is not the reason. Other considerations relating to an adverse opinion or disclaimer opinion. See, other considerations relating to an adverse opinion or disclaimer opinion, where the auditor considers necessary to express an adverse opinion or disclaim an opinion on the financial statement as a whole. The auditor report shall not also include an unmodified opinion with respect to the same financial reporting framework on a single financial statement or one or more specific elements, accounts, or items of financial statement. To include such an unmodified opinion in the same report in these circumstances would contradict the auditor's adverse opinion or disclaimer of opinion on the financial statement as a whole. Form and content of the auditor's report when the opinion is modified. When the auditor modifies the audit opinion, the auditor shall use heading qualified opinion, adverse opinion, or disclaimer opinion as appropriate for the opinion section. What's special? What special considerations are required for expressing qualified opinion? When the auditor express a qualified opinion due to material misstatement in the financial statement, the auditor shall also state that auditor opinion except for the effects of the matters described in the basis of the qualified section. When reporting in accordance with fair presentation framework, the accompanying financial statements present fairly in all financial respects and give a true and fair view in accordance with the applicable financial reporting framework. When reporting in accordance with compliance framework, the accompanying financial statements have been prepared in all material respects in accordance with the applicable financial reporting framework. When the modification arises from an inability to obtain sufficient appropriate audit evidence, the auditor shall use the corresponding phases except for the possible effects of the matters for the modified opinion. Maybe jangan deh, ya wah. Jokro, jokro. చిన్నది ప్లీజ్ ప్లీజ్ అవునే ఉండు నేను నిద్రపోతా లేని చూస్తా 10 నిమిషాలు అయిపోయింది. కరెక్ట్గా 32 minutes అయింది. 10 నిమిషాలు ఉంటే ఇది అయిపోయింది. అయిపోయినప్పుడు ఓకే. When reporting in accordance with the fair presentation framework, the accompanying financial statements present fairly in all material respects for giving true and fair view of the in accordance with the applicable financial reporting framework. When reporting in accordance with the compliance framework, the accompanying financial statements have been prepared. That is prepared in all material aspects in accordance with applicable financial reporting framework. When the modification arises from an inability to obtain sufficient appropriate audit evidence, the auditor shall use the corresponding phases except for the possible effect of the material for the modified opinion. Okay. Now, for example, CA Ash for the financial year 2020 to 23. In respect of loans and advances, 55 lakh given to 𝒟𝑒𝓃𝑒 Private Limited, the company has not furnished any agreement to CA Ash, and in absence of the same, he is unable to verify the terms of the repayment, chargeability of interest, and other terms. What kind of opinion should CA Ash give such situation? In the present case, with respect to loans and advances, 55 lakh given to 𝒟𝑒𝓃𝑒 Private Limited, the company has not furnished any agreement with to CA Ash. In absence of such agreement, CA Ash unable to verify the terms of the repayment, chargeability of interest, and other terms. For an auditor, while verifying any loans and advances, one of the most important audit evidence is the loan agreement. Therefore, the absence of such document in the represent case, liability of CA Ash to obtain such audit evidence, though a material but not pervasive, so as to require give a disclaimer opinion. Thus, in the present case, CA Ash should give qualified opinion. The relevant extract. ಯಾರ್ರಾ ಡಿಸ್ಟರ್ಬೆನ್ಸ್ ಪುಸ್ತದಲ್ಲಿ ಬಿಟ್ರಾ ಕ್ಲಾಸ್ ಓದುರಾ ಅಮ್ಮ ಪುಸ್ತದಲ್ಲಿ ಕ್ಲಾಸ್ ಓದುರಾ ತಲ್ಲಿ ಆನ್ಲೈನ್ ಕ್ಲಾಸ್ ಓದುರಾ ಜಾತ కదా వస్తున్నావా పುಸ್ತದಲ್ಲಿ బంగాళ రమ్మలే పైకి వస్తావా రే క్లాస్ ఓదురా డ్రామా See, thus, in the present case, CA Ash should give a qualified opinion. The relevant extract of the qualified opinion paragraph and the basis for the qualified opinion paragraph is as under. Rest of our information that according to the explanation given to us, except for the possible effects of the matter described, and the basis for the qualified opinion section of our report, the financial statements of 𝒟𝑒𝓃𝑒 𝒟𝑒𝓃𝑒 Limited gives true and fair view in conformity with the accounting principles generally accepted in India of the states of effects of the company as on 31st March 2023 and profit or loss for the year ended on that date. తీసుకెళ్ళి అప్పుడే తీసుకుంటారు షాపు. 7:10 అయింది. ఓకే, 2 నిమిషాలు కట్ చేస్తున్నాను. తీసుకెళ్ళ. అయ్యో, ఇలా ఛార్జీ కూడా తక్కువ ఉంది. సరే సరే, ఉండి ఒక్క పాయింట్ చదివేసి ఆపేస్తాను. The company is unable to furnish the loan agreement with respect to the loans and advances for rupees of 55 lakhs given to 𝒟𝑒𝒹𝓃𝓐𝒻𝑜 Private Limited. Consequently, in the absence of such agreement, we are unable to verify the terms of the repayment of the chargeability of the interest and other terms. What special considerations needed to express an adverse opinion? When the auditor expresses an adverse opinion, the auditor shall state that the auditor opinion, because the significant matters described in the basis for the adverse opinion, adverse section, the reporting in accordance with the fair presentation framework that accompanying the financial statement do not present fairly are given true and fair view in accordance with the applicable financial reporting framework. When reporting in accordance with the compliance framework, the accompanying the financial statement have not been prepared in all material respects in accordance with the applicable financial reporting framework. Dear friends, now I would go to my son work. So we'll come back by tomorrow morning. Tomorrow morning we'll discuss a lot. Otherwise, by 9 a.m. I'll reach the office. Then we'll discuss about lot and auditing. Thank you, Ronald, who are subscribing or watching my YouTube channel. Thank you very much. Bye bye. See you later.